Want to thank you all for being here. Wow, some dedicated traders out there until 9:30 Eastern Standard Time. We are recording this, so you'll get the benefit of that. I'm going to go ahead and bye. We trade the S&P E-mini futures, the Euro, NASDAQ, and crude futures. We have two different shark dens, and we use it with commonly used indicators. Trading Pub and TraderShark.com present market timing in the S&P futures and 5 key questions, because I sat down and most of the questions I get are, well, how do you know when you're going to enter a trade? So I thought, let's break it down step by step. This is good for new traders as well as advanced traders. Some of the stuff will look familiar, some of it will be new for you, and I'll go ahead and go over our question and answer session at the end. Disclaimer, I think, is important. I don't know if you've done that before the presentation here, but trading futures, options, futures, and exchange foreign currencies transactions involve a lot of risk. I'm reading this because I want everybody to know that this is not, the results you're going to see are not common for everybody. Just like when they talk about 90% of the traders lose money, you've got to know that you can lose all or your entire brokerage account or more before you trade. Make sure you can be a trader, and I tell everybody what I do in the room, but I'm not allowed to call trades. So I want to let you know that ahead of time. Past performance, not an indication of future results. And here's what we're going to learn today. We're going to learn 5 key elements used prior to entering a trade, how the time plays a critical role in trading futures. You're going to like to see that. Target key support and resistance levels, and trade what you see, not what you believe. So often we get our emotions involved in, I'm going to buy here because it looks good, or I'm going to buy here because it looks like it's going to go lower. And then I want you to be able to take some of these lessons home with you today and help prevent becoming shark bait. So who am I? There's my pretty mug. I'm up there in Lake Mead, Maryland. Brian Rehler. I've been a trader for over 20 years. I've traded options, stocks, Forex, futures market. My father, when I first started, taught me about bond market and mutual funds, and I thought that was great. And then I did stocks, lost some money, did options, lost some money. And then somebody said, why don't you trade futures? I said, what's a future? And then I was hooked. I was a mortgage broker for 20 years, so I learned how the treasuries worked and how the U.S. markets worked in conjunction to interest rates, kind of like that. I'm a former Army officer. I was a medevac pilot, also in Desert Storm, so maybe that'll tell you about how old I am. Professionally trained life coach by one of the world's most famous coaches. I used to live out in San Diego, California, and I helped a lot of people transform their lives. And I've taken that coaching program and applied that to some of the traders we have in the room. I have a degree in computer science. That's not saying much because these guys coming out of high school know a whole lot more than I do about computers. What are my objectives? Create a core group of like-minded traders. And I want to say this up front just mostly because they go, well, why do you do this stuff? It's great to be able to share this information amongst each other. I want to apply common non-proprietary indicators to trading futures, and I want to do it inexpensively. That was one of my objectives after spending $70,000 by going to all these other seminars and webinars and stuff. I thought I can do it less expensively. I want to help reduce one of the biggest injuries that I see most traders make. I've had personal friends, you can blow out a account very quickly, and that's by over trading. I want to help teach traders how to slow down and think before you click. I want to provide a unique training environment in a live trading room for new and experienced traders. So the biggest question, I know it's going to sound a little bit odd, everybody asks, is, you know what, if your trading system works so well, why on earth would you share it with others? And that's a great question. I would ask the same question of somebody else who's trading. Well, somebody in the room said, it's a bunch of mind sharing. And what that is I'm an extrovert by nature. That if you put me behind a computer and I don't have a chance to talk to anybody, I will go ballistic. That's what's it called, going postal. So I'm an extrovert by nature. I enjoy talking to people. And yes, of course, I earn money on subscriptions, but you'll notice my prices are very reasonable. That's not where I make my money. Trading manuals, that's not where I make trading the futures is actually where I make my money. So I'm trading live in front of people in a trading room called the Shark Den. Success comes from a team approach more than an individual approach. I'm sure you would agree with me that it's great to have other people putting your ideas into the room. They see things that I don't see. It's great to have another couple sets of eyeballs watching the screens. And it's going to sound a little bit odd, but I believe the success of our lives really revolves around the contribution to others. So a type of philanthropist. And it's profit sharing. In other words, when I make some money on certain areas, I have a certain percent that I'll owe to a charitable organization, and I encourage everybody else to do the same. The Russell Home for Atypical Children and Clean the World, where they actually take soaps from all the different hotels and they distribute it to the children that are not able to purchase items like that. Let's take this step by step. I know you've seen some of these screens before. It's kind of cute, but after you place a trade, have you ever felt like this? Right? Because the market tells us that we want to get in, and all of a sudden it starts to go against you. Or how about this? I mean, these screens are ideal. I mean, I even feel that myself sometimes. Why? Because we're told that approximately 90% of the traders consistently lose money. Why? Because they don't have a plan, or they don't have a step-by-step approach. So they just look at what they're seeing, and they see a support or resistance level, and they buy or sell. So I'm going to try to give you 5 items, very basic, but I want you to follow the details and then watch these again. 5 questions prior to entering a trade. Number 1, and a lot of people, I've heard traders say, you know, they don't care what the clock says. I'm a firm believer of the clock. What time is it? Floor traders are not rocket scientists, and they don't want to be. They don't have pockets full of indicators, right? What are they using? They don't have multiple monitors. They may have an iPad and whatever they're allowed to use and bring onto the floor. They watch time, price action, and volume. Well, we can't always keep up with that, so we're going to use our own set or combination of common indicators. They use algorithms, high-frequency trading, flash orders. We've heard about that recently. Dark pools. What are dark pools? If you don't know what that is, Google it. That's where all the trading and stuff goes on before the market opens up in the morning. Behind the scenes, these big chunks of money and stocks and everything are sold that we don't even know about. So how do we beat them at their own game? What is time? Time is the most important factor in determining market movement by studying past records. These times that I'm going to show you tonight, I've put an overlay over 20 years, and that's how I came up with these times. You'll be able to prove for yourself that history does repeat itself, and that by knowing the past, you can tell the future. There is a definite relationship between time and price by William Gann. Now, these sessions, pre-market, right? We're talking about 9:30. The U.S. market opens up at 9:30, right? But before 9:30, from the previous day at 5:30 p.m. until today at 9:30, that's called the Globex range. A lot of people don't even know that the S&P futures even trade during that time frame. So since I can't stay up 24 hours a day, I will sometimes come in around 8:30. Maybe we'll watch the euro for a little bit, maybe 7:30. But from 8:30 to 9:30, it kind of gives me an idea as to where the Globex range is. If you don't know what the Globex range is, that's simply the high and the low of the overnight market, reflecting from the Asian market and the European market. And I go into that in detail in the Shark Den. So 9:30 to 9:45 is what's called a no trade zone. The primary trading session that I would encourage if you're a new trader, be trading between 9:30 and 11:30 in the morning. And that's it. And then you're done for the day. Now a little more experience, you can certainly watch it, but we've heard where a lot of traders will come in, they'll make their money in the mornings, and then they'll lose it in the afternoons. And I'll tell you what, if you do that on the floor, they're going to pull you from the afternoon trading. So focus on that 9:30 to 11:30. If I can give you any easy words of advice, that's where I'd start. Midday no trade zone. Well, it's not really a no trade zone. I call it a lunchtime trading zone. Why would 11:30 and 1:15 be that type of trading zone? I'm going to talk about that here very shortly. Session 2, in the afternoon from 1:15 until 3:30 in the afternoon is session 2. Generally, you won't find me trading. Maybe I'll get 1 or 2 trades off in that time frame. And then you've got into the close from 3:30 until 4. Generally, I don't trade the last 10 minutes of the day, so from 3:30 to 3:50. Okay, so just keep in mind, this is the basic trading sessions. Reversal zones, this is cool. From 9:50 to 10:10 is a reversal zone. Why? I don't know. I just know that a lot of traders out there have been told that, hey, watch for the market to reverse around 10 o'clock. Right? All of the professionals, they're setting up in the mornings, they're shaking everybody out. This first half hour is generally called amateur hour. Yes, I know it's a half hour, but it's a time frame that they know. They call it, I've got some friends that are up in Chicago on the floor, and they'll say it's like taking candy from a baby. They know exactly how the masses are moving, and that's when they're manipulating the market. So why is that important? If the market does not reverse from 9:50 to 10:10, the likelihood is continuation higher. And we have one very specific rule in the Shark Den, how we know whether it's reversed or whether it is not. Oops, sorry about that. 10:25 to 10:30, the second reversal zone. Again, do you think it's important for us to know where the majority of, let's say, average traders or new traders are looking to try to reverse? Right? I know we're talking about the S&P futures, and that's kind of like a mutual fund. but you've got to know that for the basics of the stock market out there. People are trying to reverse around 10 o'clock. They're trying to reverse around 10:30. If they don't reverse, do you think we have an edge? We have an edge to push the market in that same direction, and I'll show you how that works. From 1:15 till 1:30, that's another reversal zone. I don't pay too much attention to it. We're coming off of the lunchtime trading zone. Just something to be aware of. From 3 o'clock to 3:10, at 3 o'clock, I'm talking about the S&P E-mini, okay? But generally, the S&P is the 500 most traded stock, so what you're going to do is they'll have effect on the other markets. This is primarily the S&P futures. That's what I trade primarily. From 3 o'clock to 3:10 is another reversal zone. Again, not a big proponent of trading until we get into about 3:30, last half hour of the day. And then right there at 3:30, another reversal zone. These sound like an awful lot of numbers, but I've got a vertical time chart with all of these in sequence on the trade plan, so we can see that throughout the day. And also in the live Shark Den, I'm announcing and I'm saying, hey, we're in the middle of a reversal zone. Markets tend to trend. If we get out of that reversal zone from 9:50 to 10:10, there's a tendency to run between 10:10 and 10:25. Just watch it. Just observe it for a little while. Observe if the markets are manipulated or not. But for example, I'm giving you all these time frames now. Don't try to trade these over the next day or so. Why? Because there's sure enough there's professional traders out there, and they will try to push the market potentially to affect this. Just be aware of whenever you watch any type of webinars and they're giving you specifics. I've seen this kind of as a general rule. They tend not to work for a couple of days, and then the market goes back into equilibrium and they'll work. Just be aware of these times, okay? 10:30 to 11:15. This is my absolute favorite time to trade. Why? At around 10:45 is when the professionals will step in. They have already determined over that first hour. They've whipsawed a lot of the newer traders out of the market. By 10:30, now they're getting ready to establish a trend. So if the market, the S&P E-mini, has reversed by 10:30 or 10 o'clock, then we know that by that 10:30 mark, we're going to tend to have a direction. If we don't get it quite off that 10:30 to 10:40 time frame, we're waiting for a little bit of a pullback, and when it starts to run, that'll give you the confidence to hold on to that trade a little longer. I know I talk a little fast. My apologies, originally from upstate New York. I just, in the room, I'll talk slow, but as things start to happen faster, I will talk a little faster. From 2:15 until 3 o'clock, I'm going to go into detail on what happens around 2 o'clock, but from 2:15 to 3 o'clock, again, I'm not much of a trader during that time frame. The volume lightens up, and it's just not one of my favorite time frames to trade. From 3:10 to 3:25, again, another trending time frame. And the no trade zones, I think this is very important. First start in the morning. I'll get you some screenshots and show you how this works. From 9:30 to 9:45, do you think maybe it's a good idea when things are happening really fast in the morning for us maybe just to rest, sit on your hands, and allow everybody else to get chopped up? 9:30, the price opens. We know where the Globex range is. We're kind of gauging, is the market going to be a trending day? Is it going to be, maybe a consolidation day? We don't know, but by 9:45, I've got a rough handle as to what direction we're going to be moving, and then we kind of absorb where the news reports are to kind of make a decision at that point. 11:30 to 1:15 used to call us a no trading zone, but what I found was from 9:30 to 11:30, if that market is relatively flat and there's no market movement, then the movement will occur during this lunchtime trading zone. So we'll tend to watch it from 11:30 until about 1 o'clock. However, if you get some good strong moves from 9:30 to 11:30, I'm done. By 11:30, I'm off grabbing something to eat, play with the dog, do something for, around the house, whatever I have to do. So just that little bit of information. You get a good move in the morning, 9:30, 11:30, I'm not going to watch at 11:30. Reward yourself. Take a break so that way you can come back in the afternoon and trade fresh again. Final no trade zone from 3:50 until 4:15. I certainly don't trade after 4 o'clock. In the last 10 minutes of the trading day, the professionals are setting up for the next trading day. So I don't want to get involved in that. It can whip very quickly. Don't want to get caught in the fast movement of the market. I see some questions coming through. I'll answer those in a little bit towards the end of this presentation. Special zones. Pay attention to this, and again, I'll show you pictures on it. From 1:30 till 2 o'clock, just make a note. If you're kind of working your way in the market towards the highs of the day, I want you to see this market tend to rise from 1:30 till 2 o'clock. 2 o'clock to 2:15. Those traders, I see some of you from the Shark Den are in with us today, and if you could say, you could probably tell me at 2 o'clock, give or take 5 minutes or so, if we're at the highs of the day, watch for this market to tend to reverse or to sell off. A lot of the traders from the bond market are closing out of their positions, and they tend to move over towards equity positions, and we just tend to see a reversal or selling pressure to the downside. You can see as much as a 3-point move, 3 to 5 point move to the downside. Happened today, as a matter of fact. 3:30 until 3:40. Again, this is the last half hour of the day. I'll look for one good move. If I don't get it, then I'm done for the day. So primary trading from 9:30 to 11:30. If there's no trading, I'll follow it from 11:30 to 1 o'clock. Then I'll take a break, come on back in from 3:30 to 4 o'clock. And then 3:45, just be aware that the professional traders are stepping in. They're starting to move the market a little faster at that point. Jesse Livermore, one of the more reputable traders, throughout all my years I've found that the big money was never made in the buying or the selling. The big money was made in the sitting or the waiting. And that is so true. We could sit, I was in a trading competition once, and both myself and the other trader, we sat there for almost an hour and 15 minutes with no trades. People were going, aren't you going to trade? Aren't you going to trade? I said, you know, if we don't get a proper setup, you don't press the button. Think before you click, right? Summary, real quick. Trader sharks consider time a critical element in determining when to enter and exit a trade. Fair? Fair enough? So, what's the market condition? Market condition, there's only 3 possible answers, right? Actually, I think there's 4. Number 1, the market could be trending up. The market could be trending down. The market could not be trending or consolidating. Or the other. The other. Trending up, we've all seen this, right? Higher highs, higher lows, trending up. I refer to this as an escalator. An escalator, draw a line across the feet, gives you a nice trend line. You can do this on shorter term charts. You can do it on longer term charts. Keep that in mind as to how an uptrend is drawn. Some people don't even know how to do that. Downtrend, lower highs, lower lows. Just like an escalator going down, you draw a line across the heads of the people going down the escalator. And there's your determination of an uptrend or downtrend. Now it gets a little more tricky. Consolidation accumulation phase. How do we know? By the time we look at this market, or you try to take a trade, you've already gotten stopped out a couple times. Well, we use a little bit of a combination of, say, what's going on in the Globex range as to where our current daily ranges are, and we may already, by 9:45 in the morning, have a rough idea if we're going to see a sideways consolidating day or not. What is this? This is an entire day, 4.5 point range. So I'll show you some key indicators. I'm not going to show you the indicators tonight, but I'm going to show you the reasons that we use them as to how could you avoid all of this. Or we have kind of a fun nuance called a GSF, a Golf Ski Fishing Index. And if we're at a 10, that means you'd rather be out golfing, skiing, or fishing than trading on a day like this. What is the other? This is the other. And I'm sure if you've been trading the market, you've seen over the last 2 or 3 weeks, this is called a megaphone pattern. And what this is it reaches up and makes higher highs, lower lows, higher highs, lower lows. We call this a search and destroy pattern. It's almost like an inverted wedge. But I want you to start to be, now that you've heard of this, I'm sure you've seen it, now you've heard it, we've got a name to it, a megaphone pattern. Watch how they grab this. I think this was just yesterday, this chart I grabbed. And what they'll do is they'll just gradually take these stops out, take the stops out, and continue. There's a specific way you can trade this. 1, 2, 3, 4, 5 on the 5th touch, you can play it to the downside in continuation. While this may not have been a clean kiss goodbye, you can kind of see how it committed traders, came back, touched what's almost the type of kiss goodbye for a continuation lower. The megaphone. Stand by. The market can stay irrational longer than you can stay solvent. Does that make sense? Say that again. The market can stay irrational longer than you can stay solvent. So we need to have indicators to tell us when that market is running sideways, consolidating, megaphone patterns. That's our only defense. We've got to use indicators in our favor. Where's the momentum? So I'm going to back up 1 second. Time, market condition or trend, momentum. Time, trend, momentum. Say it over again. Time, trend, momentum. That's what I say before I take a trade. Where's the momentum? Well, everybody's got indicators. Everybody's got, there's so many different type of momentum indicators. Let's think of it. Let's try to simplify this here. A steering wheel. This is a directional indicator. Okay? You're either going to turn left, you're going to stay straight, or you're going to turn right. a directional indicator, or what's called the ADX, average directional index. I use it with the DMI, directional movement index. Once I get that in my favor, I know that the market's going to be pushing higher, lower, or running sideways. Okay, it gives me a nice feel for direction. Well, if you don't have an accelerator, how are you going to turn? Use an accelerator CI. People can use stochastics. You can use the actual momentum indicator. Whatever you choose to use. A steering wheel is a direction. Momentum is your accelerator. If you've got the steering wheel turning bullish and you've got your accelerator kicking in, wouldn't it be a wise choice to be looking to push long on that type of trade? Got a steering wheel running flat, or what's called a yellow ADX, but your accelerator is still pushing strong. Maybe not a wise idea to be trading during that time. So this is what it looks like. We've got price action, and I want you to notice these are Heikin Ashi candles. And down below, this is a CCI indicator, right? Commodity Channel Index. It's, you know, people use a stochastics indicator. I just think the CCI is about a 1 the CCI better, my choice. In this case, we have what's called an anchor chart, or a higher time frame chart, and a lower time frame chart, which is called a trigger chart. In this regard, if you have a CCI crossing to the downside on a higher time frame chart, do you think it's a wise choice? Look at the time here, at 10:01 approximately. Do you think it's a wise choice maybe to be looking to your trigger chart or your lower time frame chart to jump on the wave or to jump in that direction? So from the anchor, can you see my cursor? I think you can see a cursor moving. Okay, good. Anyway, anchor chart, trigger chart, continuation. This is a pretty nice move. What are chart patterns? Now, keep in mind, time, trend, momentum. Thank you very much. Appreciate it, Michael. Time, trend, momentum. What are the chart patterns? This is, you know, you've got to practice. If you're just new to trading, you really need to know some of the chart patterns, just if nothing else, for common recognition, and then you get to be what's called unconscious competence. In other words, you've seen these before, and you know what's happening. I don't necessarily use it when I'm going through my 5 items, but time, trend, momentum, chart pattern. Let's look at a couple. Double tops, double bottoms. I don't like those names. I refer to a divergent top, much more appealing to me. Divergent bottom. Again, I can't educate you on the entire trading methodology, but what I can do is give you some ideas, which you can go home and you can research some of this stuff on your own. Wedges, triangles, ascending wedges, descending wedges. Again, these are I'm taking, you know, there's like, what, 15 different patterns. I'm trying to take 3 basic ones for you to be aware of. Double tops, divergent tops, divergent bottoms, wedges, ascending, descending wedges, and head and shoulders and inverted head and shoulders patterns. Go back and check out some of the videos. You'll see we had an inverted head and shoulders yesterday, and in hindsight, they're really clear. In the room, I'll try to tell people this is what it looks like a head and shoulders setting up, and we'll just use our common steering wheel, if you will, the directional indicator, with the CCI and momentum, and take advantage of the patterns that we're seeing here. Inside the shark den, the megaphone pattern, I want to explain this, also called a search and destroy algorithm, inverted wedge or broadening top. So if you want to Google this and check this out, this is what I've been seeing happen with these auto algorithms and Autobots. They're wiping out the highs and wiping out the lows and making it very difficult to trade. There's the frowning face again. So shark den patterns, again, these are unique to the shark den, but some of them will look familiar. It's just we have specific nuances to each one. Number one, we have what are called wave trades. We have what are called dive trades. A dive trade is kind of it's like I can't even describe it in terms of a regular trade. You have to see that. The wave trade is what I just showed you on the CCI. Dive trade is a type of reversal trade. Hook patterns, type of flag pattern, but it's got a specific nuance to it. Attack zones, those are just basic pullbacks into moving averages. And shark attack trades, which are unique to the shark den. Where is support and resistance? Again, this is another one of those unconscious, competent type of things. You know where support and resistance levels are. I just want to bring it more to your attention right now. I'm going to show you some lines. Master the basics, and you will master the arts from martial arts instructor. Okay? Understand the basics, and the rest will follow. What are support and resistance levels? I think I'm going to help brighten, clear this up for a lot of people because there are misnomers, and they even still do it in the shark den. I'm going to show you something. Where is support and resistance? Many traders believe that previous highs or tops, or a top, is a reversal or a type of resistance level, and they try to reverse up there. Big mistake. A previous low or bottom is a support level. That can also be a big mistake if you don't read the indicators properly. So what I'm going to try to do is clarify, this is what people believe. They believe this is a resistance level. If they thought this was a resistance level to the left, they probably got burned. This is what they believe, the support levels. If they believe this is a support level, they could have got burnt here, 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 and here. So let's go ahead and look at it from a different angle. The correct way to determine a support level or a significant level, and the reason this is important is this significant level is what's going to determine whether the market reverses at the reversal zones. It all makes sense when you put it together. When a previous high is penetrated, that high becomes support for the next move higher. Support level, not a resistance level. Like this. If we have a high, pull back, breaks that high, this becomes support. Continuation, pull back. This is where you can place your trail stops behind the support levels. Breaks the support level, continues, more support for continuation. So this will help tell us if this support level is not broken by 10 o'clock in the morning, likelihood continuation higher. The correct way to determine a resistance level or a significant level, the same thing, it's just to the downside. When a previous low is penetrated, that low becomes a resistance level for the move lower. In other words, the old low becomes the new resistance level. Let's look at it. Does it make sense? Everybody thought this was resistance. These are the resistance levels. So as price action works its way lower and it breaks those levels, it becomes a resistance, but you want to be aware for the future reference, this is how the professionals are moving the market. They're moving it on stocks the same way. That's how they know where they're placing their stops. That's why the megaphone pattern is working so effectively against traders like this. Support and resistance levels, now this looks a little bit different than the first slide I showed you where up here they had the resistance and down here they had support. Pretty cool? Repetition is the mother of skill. Tony Robbins, one of the world's greatest life coaches. Hint, hint, hint. I was actually a professional coach with them out in San Diego. 5 questions. We're going to review them real quick. Time. What time is it? Consolidating. Number 3, momentum. Number 4, pattern recognition. Number 5, support resistance. 4 and 5, again, this is something you need to get proficient at. 1, 2, and 3 are going to come naturally. So how do we put it all together? This is a screen, which you'll see very similar to what we use in the shark den. And I want you to see these dark lines are called shark bands. I calculate those by hand, manually, daily. Nobody has those except for me. But I do want you to notice how they pose significant support, significant resistance. Sometimes they're thicker than others, but the idea is these movements between these shark bands are met with pullbacks. I'm not a breakout trader, I'm a pullback trader. So if this breaks out, I may not get this initial run, but I will get it on this pullback for a continuation. So I'm not a big home run hitter. I mean, you may see in the shark den we make, maybe 4 ticks. 1 tick is $12.50. Okay, you may make 4 ticks, 6 ticks, 8 ticks. If you get a good trade or you get what's called a hook pattern, you could get 24 or 30 ticks. You certainly could. So you got to be patient. You got to pay your dues with time, screen time. And so I'm going to show you some of the trades from the last 2 days. I want you to see this. We have an opening range. We have shark bands. Break out of the opening range. Continue. Nice hook pattern for the next shark band. This is not really for the faint of heart. This is not for a new trader. A new trader would be over on the trigger chart. Again, anchor chart set up. Trigger chart fires off. I know I'm repeating myself, but I don't expect everybody to remember everything I'm saying. So I want you to, the repetition is the mother of skill. Anchor chart sets. Trigger chart fires off. I want you to see in this same tonality and voice that I'm talking about right now is exactly how I'm talking about it in the shark den. And then where we enter right here, this is where we're looking for an entry. I'm not trying to get people to come in and follow me. I want to educate people so you can be trading side by side with me, and that way we're both taking the same trades together. In this case, I may scale out 2, 4, and 6 ticks and be done right and through here. However, this is the conservative trader's trade. If I'm aggressive, I may be taking a trade in here, and I may have a runner with a trail stop for a bigger hit. And you'll see that again on some future slides. So let's look at some screenshots. I tried to grab these from the most recent couple days. Some of these back at 1300 level. This is not recently, but I want you to notice this 10 o'clock time frame here. 9:50 to 10:10. I want you to notice there was not really a significant pullback. A little bit here, but by 10:10, if there was no significant level, a line, but you can see this as your significant level. We talked about this. This is a support level now. If this is a support level and you're coming into 9:50 to 10:10 and the market stays above this range, if this significant level is not crossed, then I'm telling everybody at this point, I'm looking to go long. Bang, bang, bang. I'm looking to go long. Why? Because the significant level is not broken. They've snaked in a whole bunch of traders trying to get short. Looks like they may even try to get them to do it here, and I'll be in a long position. So if I got into a long position here, I may only get a first target or second target, or I may get stopped out. But if you enter in through here, you should be protected by your stop to hold on for the continuation higher here. What happened at 10:30? I don't know if you can see these times. When you get a copy of these webinars, you can go ahead and zoom in on these time zones. Down here, 10:25 to 10:30. What happened here? There was no reversal. If this 10:25 to 10:30 did not reverse, what's going to happen? Likelihood continuation in the trend direction. Pretty cool? Okay, 10:30, another 10:30 continuation. At 9:55 to 10 o'clock, again, 9:50 to 10:10, did not reverse. There was no significant level I could see here. We did have a significant level here. It looks like it was broken. And so if it was broken, I would consider the trend over until we continue higher. How do we resume the trend? We resume the trend by breaking the previous high. Again, this is not a resistance level. This is just simply a high. So a burst higher from what? 10:30, no reversal, likelihood continuation higher. Does it happen 100% of the time? No, of course not. But it's a nuance or an edge that I'd like to instill in you as you watch the markets develop from here forward. So if we look here, you'll notice that a yellow arrow says, I didn't take the trade. It was a nice setup. We had a little bit of a breakout here based on the CCI and how we read it. We had a little bit of a breakout. I did not take this trade. So I'll tell everybody, hey, nice trade. I didn't get into it. Some of the traders in the room may. Here, nice pullback. I did get into this trade, got my first target off for 2 ticks, and I got stopped out for -3. It's going to happen. You're not going to win every single time, and you will take full stop outs. A full stop out could be anywhere from 10, 12, 14 ticks, 16 ticks. Just know that the consistency and the probabilities, that we play the high probability trades. So if this one got stopped out for -3 ticks, the next trade was a total of 4 ticks, forced myself out, and you can't see to the right-hand side of the screen for continuation lower. Just know that there's the consistency of the base by base hitting as opposed to sitting in and trying to get those home runs. This is what's called a hook pattern. I want you to notice a nice breakout of the opening range. We already knew where the Globex range was. I won't go into too much detail about the Globex range. This is a completely different course in itself. But the narrower that Globex range is, the narrower the breakout range is going to be. With this breakout, pullback, hook pattern, look at the likelihood in the target levels. Where are our targets on hook patterns? 4 ticks, 50%, and 100%. 70%, 60%, and 50% probability of success. Make sense? So on this particular trade, you take 3 contracts, T1, T2, T3, 4 ticks, $50, 50%, wherever that is, in this case probably 7 or 8 ticks, and 100% for a runner, which is only 50% probability. Pretty cool, huh? This is another screenshot of an anchor chart with a trigger chart. The anchor chart, again, meant for more aggressive traders. Trigger chart meant for more conservative traders. So let's look again. Anchor chart, wave trade. Repetition is the mother of skill. You got a trend line break on the CCI. Anchor chart sets long. T1, T2, T took it, and you held on for 3 contracts. For the most part, conservatively, you want to go with a higher probability setup, go for your T1 and T2. You're out with 4 and 6, maybe 4 and 8 ticks, 12 ticks. That's more than most traders make in one day. Over here to the right, trigger chart. Trigger chart fires off. Look at the yellow. The yellow arrow, I did not get into it. Telling everybody loud and clear in the room, hey, I missed it. I'm waiting. I get above my moving averages, a little bit of a pullback. I'm in. 2 ticks and 8 ticks, a total of 10 ticks. There you are, 125 bucks. And notice our indicators are staying in our favor. Whew. Now, I know I speak awful fast, but I know you guys have also, people have all been listening to webinars all day. So I'm not going to drag it. I've got a couple bonus sections and I'll show you here. I'm also going to show you some specials I've got going on. I don't know, Yana, I sent you an email. I don't know if you can go ahead and put that in there maybe for the announcement. This is, that's the website, and I'm going to go ahead and put the link. I'll go ahead and explain that in a second, Steve. If I missed any questions, let me go and scroll this up. If you don't mind, there should be a little red Q by your name. If I missed a question, it's not because I was avoiding it, I just didn't see it, so let's see. Very choppy this evening. Is my audio okay? Was my audio? Okay. Anyways, if you don't mind, please repeat. There you go. Thank you, Jan. I appreciate it. Please repeat your question. And I'm going to go into some more screenshots here in a little bit if you hang in there with us. I'm sorry about that, Chris. I didn't know. I didn't look over if there was any voice problems. Audio's fine? Good? Okay. What kind of stops do I use? I will use a risk-reward ratio. It's going to sound harsh at first, but you've got to give the market room to wiggle. And so I'll start with an 8-tick stop on 2 contracts. That's 16 ticks. But generally, as you can see, we're getting in a wave trade. From a higher time frame chart to a lower time frame chart, we are getting into a direction that, if nothing else, would really shake us into that first contract. Now, I have about 8 different trade setups. I focus on 2 primary trade setups, and it's all clearly defined in the trading manuals. It's also I'm very detailed as to the settings. I do use TradeStation. We also have settings for NinjaTrader. And when the first target is hit, the stop will move up to either 4 ticks or 5 ticks. Now again, at that point, I'll pull the dome, or what's called a depth of market in, and I'll look to see where the buyers and sellers are. Or for the pullback range, I wish I could show you on a, if I have a couple minutes in the end, I'll go to a live chart, and I will show you on a Fibonacci level. A lot of traders will do a 50% pullback, but just make a note of this. On the 50% levels, let me see, I'm going to go forward while the questions are being answered. This is the website, tradershark.com, and I'm going to go back and answer those questions in 1 second. Go to the Home tab, and there's the webinar specials. And I want to offer a special thanks to Trading Pub for inviting me to participate today. It's been an honor. Go to tradershark.com, Home, Webinar Specials, and this is what you're going to see. My manuals are usually $149. I'm getting all 4 trading manuals for $99. This is good till Friday at midnight tomorrow. Shark Den is generally $179. If you go in there and you put in right there where it says subscribe, you'll get $50 off each Shark Den, both the S&P and the Euro and the NASDAQ and the crude. I'm going to leave this up for 1 second. I want you to notice this. If you're a Fibonacci trader and you watch the pullbacks, a lot of times fib levels, 50% or a 38 to 62% retracement is generally what traders are looking for. Watch this happening in the future. If you're a 50% retracement trader, try to subtract 4 ticks from your entry, because what we're seeing right now is retracement to 50%, drops down to first target, and then pulls back up to that 62% retracement to take out all the stops. And generally that 62% retracement is going to be 4 ticks. So if that retracement is 4 ticks, you get stopped out. So sometimes I'll put a 4, 5, or 6 tick stop just to stay outside of that range of the pullback. Look, the Autobots are smart. The professionals are smart. The big institutions have all these money, this big volumes of money they're putting in to move their computers closer to Chicago or Wall Street to get the most updated information. We have to have an edge. The only edge we can do is by pattern recognition. They've been the same for hundreds of years. The setups of a Fibonacci retracement has been around forever. This Fibonacci retracement, watch for the 50% retracement, and then watch for that pullback to 4 ticks beyond your initial entry. And try that for a new entry now. What else we got? If you use Renko, what should you use for the higher time frame chart? I don't use Renko bars. I do watch it on the side. I just use a 1 bar, which is 4 ticks. And what I use really on the Renko bar, is I use the CCI on the Renko bars, which is really hot right now. 8 ticks on the ES? Yes, initially. Now, when would that change? If I'm doing a hook pattern, if I'm doing a dive trade, each one is going to be unique and a little bit different. And I would caution traders, try not to get into the black and white mode. A lot of times people say, buy here, sell here. You know what? The market is fluid, and we've got to be that way in our thinking. So because it's black and white setup, we want to be very cautious as to say it's only 8 ticks. So a pullback, well, a pullback is 10 ticks. From a black and white perspective, it is. But I would prefer to use a significant level, which could be 12 or 13 or 14 ticks to be my launching point, if you will, or to be my, quote, significant level. Okay, so I hope that answers your question. I'm trying to catch the questions if I can. Do we have double top today in the S&P? My mind is on the webinar. I can't focus on that. I don't remember. I honestly don't remember. Tends to hit the high and low. You know, this is what's great about having traders in the room. One of the traders in there very, very astute. We've got professional traders. We've got new traders. We've got physicians. We've got photographers. Broad range, left brain activity, right brain activity. And one trader noticed this. If you take your Globex range, there was a, don't quote me on this, I think a 92% chance of taking out the Globex range high and the Globex range low. I'm sorry, the Globex high and the Globex low for a 92%, and then very low probability of taking out the other side of that Globex range. That being said, we have seen that consistently. That is the epitome of a megaphone pattern. Pretty wild, huh? All right, let me see if I got the rest of the questions. How can one be in multiple dens at the same time? You can, that's a little more difficult question. I've got a free trial going on tomorrow. You can also find on the same page, if you scroll down, you can log in for the free trial. It's going to be open tomorrow for the S&P and the Euro Shark Den. And then Monday is going to be the NASDAQ and the Crude Shark Den with Art. Art's my other trader. Okay. If you want to try to be in both rooms, I've got 4 monitors and 3 computers. So you got to do what you got to do. And I wouldn't recommend you do it when you're first starting. If you're an advanced trader, then you already have a couple computers. A couple prior speakers suggested the ES is manipulated and that retail traders are better. I noticed that. I did notice that, Scott. Yeah. Better off with the TF. I was under the impression that the Russell is not that liquid and that the ES is better off for the reason. Great question, Scott. Fantastic question. Number one, is the S&P manipulated? You bet it is. You bet it is. We're going to take advantage of the manipulation. So if there's Shark Den members in here, we use the directional indicator. And I mean, we could sit an hour with no trades. If you're a high frequency trader and you want to be trading 20 or 30 times a day, my room is not for you. If you want to trade one time every 3 or 4 days, my room is not for you. We'll trade anywhere from 0 to maybe 5 times a day. 0 to 5 times a day. I broadcast live from 9:30 to 11:30. Sometimes I'll come in at 8:30. Sometimes I'll step in during the afternoons, maybe the lunch hour. Sometimes in the afternoon. The afternoon, the traders are left on their own, but everybody kind of helps each other. The S&P E-mini is one of the most liquid. It is the most liquid market out there. It's a matter of us. No matter what you trade, it's got to speak to you. So some people love the Russell. Some people love the NASDAQ. Some people love crude. You know what? To me, crude is too fast. To me, gold is too fast. The euro is even too fast sometimes. I mean, today when President Draghi was speaking, that thing was eating everybody's lunch. There's times to sit on your hands, and there's times to be in the trade. So I think one of the most important things, and you won't hear many traders tell you this, is I'm going to teach you when not to trade, when to stay out of the trade. That's, you know, when do you sit on your hands? When that ADX turns yellow. And when it turns yellow, I'm not going to tell you settings right now. You got to come in and watch me. Okay? But if it turns yellow, it's a clear indication that no direction is being dictated. So if there's no direction, why do we want to be in a trade? What else? Let me see. So I like the S&P. That's what speaks to me. Other traders like the, and maybe the indicators that the other rooms or the other traders are using, theirs works for them on the TF, right? To me, I've traded all of them. I like the ES. I always come back to that. I do show them every once in a while, just my choice. Personal preference, I would have to say. And don't go in there trading with real money. In fact, does anybody, does, Yellen said, yeah, when Yellen is speaking, that's a good time to sit on your hands, right? And what I said in my, go back and check out the previous videos. My videos are like 3 minutes each time. Listen to that. When the talking heads are speaking, that would be the President of the United States or the federal chairman, no matter who they are. If they're talking, the best bet is to sit on your hands and don't get into a trade. Look what happened when President Draghi was speaking. Look what happens when Janet Yellen is speaking. So we call it Yellen is telling, right? Yellen is telling, and that's a good time to be sitting on your hand. So TF acts like crude, sure. Yeah, that's a great analogy. It's that fast. It's a little lower liquid market. What else can I tell you about that? The Russell's just too fast for me. CCI on the Renko bar. That's what I use. Yes, Chris. How do you arrive at the red, blue, green levels on your charts? Those are called sharp bands, and I calculate them, and that is a proprietary setting. You don't need those settings, but I can educate you as to how to come up with something very similar. Okay, but I'm not going to give you that. That kind of keeps the people focused on the sharp band. I don't want it out there to the professionals. I don't want them to know. I use gradient slopes. I use a lot of information, and a lot of it is my own. I can't even program it. There's so much information that goes into that. I cannot program it. We've tried. We just can't do it. Yeah, the trading results are on the website. Do you find most members take similar trades as you do in the room, i.e. replicate performance? I would say, Danny, I would say no, they don't. I would say the more experienced traders hold on longer than I do. I tend to be conservative. I tend to get out sooner. And what's the difference between a conservative trader and an aggressive trader? A conservative trader may have a $2,000 account. I wouldn't recommend they be trading, not the futures market. I would recommend you start with a minimum of $5,000, a minimum of $2,500 per contract, and you trade for shorter profit targets. Trust me when I say this. Go for your shorter profit targets when you have a smaller trading account. Otherwise, you soon won't have a trading account. And in the trading manual, I go into detail, really simple examples on trade management and money management and how you gear your trades. If you've got a $50,000 trading account, hey, go for your T1, T2, T3 because you can weather a deeper stop loss. So you've heard the old adage, the higher the risk, the higher potential, profit potential. The lower the risk, the lower profit potential. So you'll see on my screens, they'll range anywhere from maybe plus 2 ticks to plus 30 ticks or minus 2 ticks, minus 8 ticks. Okay. What does the first month only? After that, how much? It's usually 179. The first month is 129, which I think is very reasonable. Even NQ is fast, yes. Do I trade sim or live in the trading room? I trade live only. I trade live only. Once I've hit my profit targets, I will tell everybody I'm going to sim. I trade 3 different platforms. I trade an aggressive platform, I trade a conservative platform, and I trade a personal family account. Are you offering any discounts on your indicators? There are, you know what? I believe there is if you look on this page, look over on the right-hand side, it says coupon code. If you put in pub, P-U-B, for trading pub, just put pub for the passcode, you can get $50 off anything you purchase. Okay? But that's only till Friday tomorrow. Aside from that, you know what? The indicators, you don't need to purchase the indicators. The settings and everything in the trading manuals, you can design them yourself. But if you want to save yourself the headaches of that or doing it yourself, then you can buy the indicators. We do have some pretty more aesthetically pleasing, what do I want to say? They help you recognize the entries and exits better. And that's not proprietary, but my programmer did it, and he gets paid for it. And with the money that we've made, he's bought his son, computers and getting his son to college. So yes, those indicators are for sale. Check them out. Everything on the website is pretty self-explanatory. Options on the ES. Can you exercise prior to expiration? You can, but I'm not an options trader. I have been. I wasn't very good at it, so I don't trade that. What is the link for the free room tomorrow? Go ahead and go to the site right here. Go to tradershark.com, home, webinar specials, and you'll see it right there. I'm not done. I'm going to go ahead and go to a couple more screens. Let's see what you got. There you go. Thank you, Trading Pub, if that's you, Morgan, or Yana. Thank you. How many trades do I average per day? Again, those are on the frequently asked questions page. I would say 3 to 4 trades per day. And again, you got a sideways moving market. We could go a whole week with few trades. Or again, go to the performance tab. You'll go ahead and see that. Sometimes 10 trades, 11 trades a day. Can you show the last market tend to trend time zone? Can you show the last market tends to trend time zone? Those are going to be on the screen. I don't want to go back yet. I'm going to go forward. I'm not done yet. Yeah, daily performance on the website. Do I use hard stops? I think everybody should use two types of stops. Number one is initially you have a stop that's a hard stop, or what's called, I'm not sure if you're referring to, it's called a catastrophic stop. In other words, hey, if you've got a runner and you're trading during an announcement of the president or the federal chair, which you are, and I wouldn't recommend it, if you are, and you're trading without a stop, that's dangerous. A hard stop would be what's called a catastrophic stop. So if something dramatic happens, boom, you get taken out. But the stops initially go in, and I know this is going to be totally against what you've all been told. I will move my stops. I will move my stops based on what I'm seeing on the dome. Okay, but I tell everybody exactly what I'm doing. So again, I'm not a licensed broker. I can't call trades, but I do tell everybody what I'm doing, why, when. You can see if I take a loss. You can see if I take a gain. Okay, I'm not 100% perfect. Sometimes I'll hold a runner and I won't tell people about it. My apology. The other day it happened. It doesn't happen very often. Okay, let me keep going. I'm gonna see if I can go. I've answered most questions. This is me. If you have any questions, Brian@TraderShark.com. Now, bonus. I forgot what the bonus was. What is my favorite indicator? I even surprise myself sometimes. You're confused? I don't trade the FDAX, no. What do you think correctly answer your question? All right, I'll come back to that in a second. If you want, email me and I'd be happy to answer any questions. It's very transparent. Okay, the $ tick. This is the $ tick. This is a 1-minute chart. And what I do is I have a 20-period moving average on here. You don't see this right now, but these are the lines I use. I've transformed this to dots, and the dots will turn all gray if the tick chart, the average tick chart, is in between the plus 100 or minus 100. Okay? This is critical. If nobody's buying or selling, why do I want to be in the market? And yet, if the market pops above plus 800, we call this the shot across the bow. It turns out a big green dot, right? If this big green dot, first thing I'm going to do is be looking for sell orders. Why? Because they're pumping the market higher to draw in a lot of the indicators, proprietary indicators, and they'll try to throw the indicators off. They'll try to throw market profile, volume. They'll try to throw it off, and the market will tend to reverse. If you don't believe me, try this. Just watch how this happens. When the market pops above plus 800, the first opportunity to fade the market. The second time, which I didn't show here, and I apologize, the second time it pops above that plus 800, it's a go with scenario. So the first pop above plus 800, you would try to short the market, or you're looking for a shorting opportunity. The second time, you're looking for a reason to carry through and go with it, because now they're coming in force. Same thing to the downside. If the tick chart drops below the minus 800, pops below it, first opportunity to fade the market, happens the second time, go with it. Pretty cool? And I got another bonus if you want, but I'm not going to go there for 1 second. I do want to emphasize one thing. No matter what you trade, whether it's stocks, options, futures, the TF, Russell, NASDAQ, Dow, crude, and whatever, if you're just starting, trade simulator, and you're going to say, oh, trade simulator. Go to my website, go back to here to the website, and under webinar specials, let's see, under Learning Center, go to the videos tab. If you go to the videos tab, there's a video presentation. You get a chance to see who I am and what I talk about. I tell everybody how to simulation trade. Simulation trading is boring, right? I've got kind of a fun way to make it so it's not so boring. And the idea is you need to select a person that you don't want to pay money to, such as your wife or your husband. You can't do your children because it's a trade. You have to give that significant other whatever you've chosen to be $5, $10, $100 every time you lose. I promise you that will make you feel like sim trading is real. And what have you done? You've just created an instant accountability partner. Right? You walk up to your spouse and you go, guess what? I lost 2 trades today. Here's 20 bucks. And he or she's going to say, what? Thanks for the money, but you lost today? And That's going to make you a better trader, I promise. Anyway, I want to thank you all for your time. I hope I answered all your questions. Do I use volume? I seldom use volume. No. I believe the CCI with the directional indicator is sufficient. I also use the tick chart. Let's see if I answer all your questions. See what you got. Okay. Available by email? Yes, I am. I'm available by email. Charts and questions. Look, I've got a lot of people that I monitor. I've got quite a few people. So if you keep it brief, keep it concise, I'll answer your questions. Okay? I use the NYSE tick. Yes, I do. Not the S&P tick. Nope, NYSE. Yep. Do I use the breadth, the trend, the advanced decliners? I do watch the advanced decliners. Yep. Absolutely. Absolutely. Yeah. The dollar sign tick does. The NYSE on the tick chart. Sure. The S&P, look, if you're trading the Dow, wouldn't it be great to have the S&P next to the Dow? The Dow is the 30 blue chip stocks. Do you think all 30 of those blue chip stocks are generally in the S&P? Yes. Of course they are. Here's the question of the day. Ready? The question of the day. What leads? The cash index or the futures index? What leads? The cash or the futures? Cash. You would think the futures index leads, right? Cash index. There you go. You both get 3 stars for today. If you come into the Shark Den, you may get 4 or 5 stars. Everybody fights over whether I highlight their comments or anything, okay? Anyways, everybody happy? Y'all get some good information? Can you take that information with you home today and maybe learn a little bit? Come on in and join us. Go to the Home tab. Go to the Webinar Specials. Trader Shark Home Specials. And enjoy. Thank you all for your time. Thank you to Trading Pub. And I wish you all the most of success in your trading career. Cash index is the cash S&P futures, the S&P. Okay. Thank you, Morgan, and thank you, Yana. Have a great night, everybody. One more thing, in the manuals, you can get a copy of Chapter 3, and you can get a copy of the table of contents by going to the website. Okay.